Hey, what's up you guys? In this video we will be talking about the dividend investing and how does it really works. So in the past video we did discuss about my dividend portfolio and how I am planning to expand it over the period of 2020 and furthermore years down the road. But initially we need to understand what dividend stocks really mean. So dividends are nothing but a way of company to appreciate their investors in investing in their company. Basically they give the benefits, whatever the profits they gain from different industries, they like to share those profits basically in the form of dividends. So that's what it really means. And why people prefer dividends over the regular stocks is the volatility. Dividend stocks, what a company is committing to is they want to give you the benefits of their profits. So basically they are saying that beware that you are investing in us, but at the same time we are making sure that you are getting the best out of it investment. So dividend benefits obviously are the way to go for me for now. But there's another catch to it. So we have been talking about dividend and stocks and stuff over the past few years, and there are quite a few individuals who really prefer dividend stocks over the regular non-paying dividend stocks, which are sometimes referred as growth stocks. But there's obviously a downside to dividend stocks as well. It's not just always rainbows and butterflies, but the downside for dividend stocks is nothing but the same thing that can happen to any other stock, and that is stock market crash at any given point, and that will lead to the loss of dividends. Because remember, dividends are nothing but advantage from the company. It's not a mandatory thing for a company to commit to, so you are not guaranteed to get a dividend. But there are two types of dividend companies that we have discussed in our previous videos as well, and I'm gonna briefly discuss this in this video as well. So this company that we are referring to as Dividend Aristocrat has not only provided you the benefits over the past 25 years of dividends, but also they have increased the dividends on annual basis. So say for example, in the beginning of the year, their dividend yield was 2%. Then the profit in dividends will increase with the time over the past 1 year. So eventually at the end of the year you will definitely be making more than what you signed up for initially. So that's something that is referred to a company which is Dividend Aristocrat. Then there is another type of company which is basically a Dividend King. And a Dividend King is nothing but it's a company which provides you the benefits of dividends over the 50 years time period. So they not only have provided you the dividends, but also have increased the dividends payments over the past 50 years. So these are the companies, big companies like Johnson & Johnson, Coca-Cola company. So these companies have been able to provide you and reap the benefits of their growth over the past 50 years. So nothing to take away from Dividend Kings anything, but I really want to mention here one thing, that Dividend Kings basically are the companies which show little growth compared to compared to dividend aristocrats, or even the other regular dividend paying companies which are not even dividend aristocrats. And why is it so is at the scale of their level, being able to provide 50 years of consecutive dividends with an increase every year is not that easy. And then obviously the growth part definitely gets affected with being able to provide dividends to their investors. So that's something to look for if you are going with more consistent and more permanent dividends. Then definitely there's something that you should consider while considering the dividend kings. These were the two types of dividend companies that you'll come across on everyday basis. But then why go with dividends when you can invest in companies like Apple, Amazon, Netflix, and some other companies who have seen like crazy growth over past couple of years. And another important thing to mention here is that companies like Apple have recently been started paying out dividends. So obviously it's by recently I don't mean a few weeks ago or something, but in last few years they have started paying dividends, right? So it's not like they are not going to pay you dividends. So that's why if you have noticed over the past few years, companies like Apple have grown so fast, not only because they're the company values at that much, but also they are growth stocks, and again on top of that they are paying dividends. So this is huge. While the case of Amazon and Netflix obviously is different than this, but you need to consider all the added advantages and disadvantages which come with buying a share of any specific company. With that said, Apple, the growth of Apple, we were talking about the growth of Apple stock as a dividend in a paying company, is also important because investors like Warren Buffett have invested in this company, and obviously this is a company where which has innovated so much that it's really hard to compete with them in their game, but there are a few things missing on their end as well. Obviously every business has a downside as well. I won't say it's a downside, but this is something that Apple might consider in future. Their cloud service is iCloud, but they don't provide web services for cloud like Amazon or Microsoft. Microsoft has Azure, Amazon has AWS, and Google has its own Google Cloud platform. So Apple does lack there a little bit, but obviously it knocks out everyone when they talk about if you talk about the investment in a company which has a proven track record of quite a few years. So obviously what I'm trying to make a point here is every company has pros and cons, so you need to make sure that whatever you are signing up for is what you really want to achieve. There honestly there are thousands of stocks available right now in the market, and I'm pretty sure whatever you are looking for, long-term growth or dividend yields or something long-term, then obviously you'll find something that matches your criteria of what you are looking for in the company. At the same time, if you're looking to get rich quick, then there are companies as well which are which have very low market share, but at the same time they might give you crazy benefits, show some crazy growth, because growing from $100 of a company to $1 million is faster than $1 million to $1 billion, right? And that's why I discussed the kings, dividend kings, and why their growth is little slower, because of the mass scale that they are working on. Yeah, that's my take on dividends, and a lesson for myself as well as you, because this is really important to understand what dividend stocks really mean. And as I said, there are perks and benefits, especially in the recession economy. There are more perks of dividend stocks because you are most likely to get dividends, even if they are cut down to very less for a specific company, but still you're gonna get paid in most cases. But at the same time, if you're signing up for something that is growth, that might give you give you more numbers, give you more benefits, show you more growth in the short term, while a company is growing fast and the economy of the country or the world itself is growing fast. So yeah, that's about it. Hey guys, thank you for watching this video, and I really appreciate if you subscribe to this channel and leave a comment. A comment would really help me understand what your needs are, and I can discuss individually your scenario and where you should invest, be it dividend stocks or growth stocks or dividend growth stocks. So let me give you a few links in the description box, and those will guide you to the places where I have learned over the time what dividend stocks are and how they really work. And yeah, it would be really beneficial for the channel and for me to invest more if you guys subscribe and like this video. I hope you guys will take care of yourself.